Here. Who else would it be? This is Observations with Otsu. This is Tuesday. This is not Monday. I am a day late for this. I had a lot of things going on, had some delays. I actually had half of yesterday's observations video ready to go. I still need to upload and edit and all that, but it was recorded. I was preparing. We had some things going on, and then I had some other issues. Some I could control, some I could not control. I mentioned this in my Discord, and then I decided to just scrap it all because I wasn't really gaining any traction for the day. It was already 3 o'clock by the time I could adjust myself to the markets, and I was just like, all right, I'll just do it tomorrow. And so I felt like that was better because I've noticed in my experience that it's best not to just rush some things. It's although that will upset some people by delaying something a certain day. Most of you guys don't care, right? And then on the other hand, if I'm trying to rush for a certain thing that I can delay, it just causes me more stress for the next day and really the next for the rest of the week. So I apologize for the delay, and I hope that you will enjoy this video and continue to enjoy my content. And so that's kind of the the disclaimer, introduction, whatever from yesterday. So with today, I wanted to shift my tone just a little bit. So the theme for yesterday was going to be a little more focused on the looking at bearish news and trying to incorporate your emotions and all that into trading. And I was going to connect that to the Middle Eastern conflict that we've had over the weekend. And honestly, it's something that's been going on for quite a long time, longer than pretty much every one of us have been alive. And I after reflecting on it and kind of thinking about the things that I wanted to say, I figured it might not be, I didn't say anything wrong. I didn't really go dark or nothing like that, but it's just, I felt like the tone may have been improved upon. So I wanted to change the topic just a little bit. And so I'm going to have a different theme for today. And so that adjacent theme is going to be wrapped into the title for this called The Manifold Ranges of Trading. And I want to emphasize that ranges, we talk about ranges when we trade, right? That there's a high, there's a low to a certain event. But I think if we're all honest with ourselves, and we should be honest with ourselves when we're trading. We're dealing with money here. We're dealing with other things, and this money is just a tool, but it also is a tool that affects our lives. You're in this because you want to make money, but you also want to make money because you want something to happen in your life. Or, I know people that trade because they want to improve other people's lives. They want to give more. Believe it or not, there are really good people out there in this crypto space that do that. And so you got various things, but everybody has a foundational thing when trading that's making money or not making money. So the thing is, the theme is going to be called the manifold ranges of trading, but trade ranges aren't just price action. There's going to be other things. So we're going to talk about the ranges of emotions that people face, ranges of different other emotions, like just emotions in general, but also we're going to go specific emotions like fear and things like that. We're going to talk about FOMO. We're going to talk about just general noise, social media. I think over the past weekend or past week in general is a good idea to have a discussion about social media when it comes to trading. And so, in addition to that, is just looking at the possibility. Most of those are kind of negative aspects. Like I tell people not to be emotional, not to be fearful, and that's true. But I also want to do one final thing on top of that is just the idea, the ranges of possibility. A lot of people believe that we're going to go to 300,000 Bitcoin by the end of the year, and or just I'm exaggerating that, but a lot of people think all-time highs certainly by the end of this year, and also like all-time lows. Like I've seen a range of all of that, so there's a range of possibility and probability, and some of those make sense and some of those don't. Okay, like some of that, it's a spectrum to me. That's how I view that. And so some of those, the extremes, I think obviously have a probability to be unlikely, whereas some that are not extreme have a more probability to be more likely. And so we'll go into that a little bit. We won't go into probabilities of that, but we'll talk about the ranges of that. And so that's going to be kind of the theme for today. I'm going to have a general segment where I just talk about all that in general, and so then we'll go into a topical based chart analysis. So I'll cover each one and talk about different themes of that segment. So, for example, in the segment, we'll talk generally about the ranges of trading, and not just price action, but we're going to talk about the emotions and all that. So that's going to be the general idea, the general segment of that. Bitcoin, we're going to talk about price action ranges in general and how that affects people's day to day, the emotion, the flux of that. Then we're going to go into Ethereum, and then we're going to talk about emotions more and talk about social media and fear. And then when we get to Solana, we're going to talk more about FOMO. And we might, I think we'll have, I'm going to have another section about possibility. I'm not quite sure if I'm going to put that in Solana, or if I'll have time, I'll put that into another coin. So we'll kind of go into that. And so that's kind of the introduction. I got some preliminaries, got some other thoughts before we get into it. So let's just keep going. So a couple of preliminaries, not much really. Most of them have something to do with my Discord channel. So I'm going to have Nowhere Premium, which is going to be a premium option to what I currently offer in Nowhere. It's going to be more dedication, more charts, more discussion, more one-on-one time, things like that. So that's going to be an option available sometime within October. And so that's something that you guys can look forward to as one thing. Another thing is I'm going to have Apex Academy. That's a masterclass boot camp that I'm going to have firing up. I had that last year officially as my first year. I'm firing it up again for the second year. I'm going to make a video and make a form, a wait list, but also more of just a description of what it's going to be. So a lot of stuff that will mention what the project is, what it's going to be doing, and the idea is it's going to flash crash you through 8 weeks worth of analysis. So if you don't know anything, or if you only know just a little, it really is better for beginners. And if you are aware of what I did last year, it is a paid thing. It was a paid thing last year. It's a paid thing this year. I have slashed the price by trimming certain things, and so that's going to be I think that's going to be beneficial. That is not meant to sound bad at all, but I have been able to modify it to better serve more beginners, and that was one reason why I had I had people analyze the boot camp and try to see like what would work. How can I modify this to improve it, to refine it? So I thought it best to trim down the price to make it more affordable for other people while also providing modified content. So it's going to be um, I'll give more details about that, but that's gonna launch November 1st. So we do have limited time for that, and so I'll get that launched earlier or later this week, and then I'm going to talk much more about that really for the rest of the month. So that's Apex Academy. So for the segment portion of this, I want to talk about the manifold ranges of trading. And honestly, it's a result of a lot of things that have been going on for the past year or so. And I think I did want to mention something about the conflict in the Middle East. Not because I want to necessarily, but because it has been a discussion among a lot of crypto people, and it seems, and again, I want to emphasize, I'm trying to walk a fine line here because I have my own strict opinions of the conflict, and I'm sure many of you do as well. And so I'm not here to talk about the conflict necessarily. So I'm not here to talk about it directly. Okay. But the video I wanted to mention yesterday was going to be more of a direct result on the conflict and how it affects our trading, how conflicts and black swan events and our emotions affect trading. And I thought I didn't think it was bad. I didn't say anything wrong. I wasn't going to morbid or anything like that. But I did feel like I may need to make an adjacent topic on this to kind of make something more comprehensive, more evergreen and long lasting, because just as I don't want people to consume their emotions into trading, I don't want to consume my emotions into these videos. And so I don't want every video to be, oh, you got to look at the next thing, or you can't let this affect you, or whatever. So I think I want to take a step back. I want to kind of analyze this and understand that we go through a wide range, and the keyword there is range of really everything. So as a trader, you know, and I can kind of look at some charts while I'm talking here, is that pretty much everything is a range, right? So you got, I mean, not exactly the best scenario here, but this is a range technically, not the best range. I could have gave better examples, but this is a range that's in front of me on my screen right now. So this is your range high, this is your range low. Really, this part is your range, you know, and so I connected it here because of the liquidity gap and all that. So this is really your range here, and this is your sub range, and we'll look at that maybe today later in this video. But what you need to know here is this is basically a range, and there's a lot of things going on here. Inside this range, you got a lot of very strong candles, you got strong wicks, you got consolidations, you got impulses, you got a lot of things that's working right there, right? And it's all to do with one particular function is eventually to break the range. And so we understand that eventually, more than likely, 99.99% chance this range will break. And if it doesn't, then we can just kiss crypto goodbye in that sense. But I mention this because this is a range that I have simplified, very simple with one box. For other people, this is much more complex. It's more complicated. It's a struggle. There's a lot of people, even good trade. I know really good traders that have confessed um, on live streams this year, and I say this as a I, I say this as I know these people and I appreciate these people, and they have said that 2023 has been a bad year for them to trade crypto. Now, it hasn't been a good bad year to trade stocks and other things, but crypto has been relatively difficult this year. And you can see that right here. But if you zoom out, there are certain ways you can look at this to say, okay, this was easy. What are they talking about? And the reason that is the case is because people are taking different approaches. Now, what does that have to do with the theme of this video? It has to do with this because people interpret ranges in different ways. So for some people, this was more difficult to handle. For others, it was simple as just buying and longing. But the whole idea is within a range for price action, and this will connect to the Middle East here in a second. When you're dealing with ranges and price action, you're going through different things. You have an engulfing candle right here. You got SPFs over here. You got other things at hand. So for those people that deal with price action, it's not as simple as just. It is as simple as playing the range, but there's ranges within ranges. Things get more complicated. Blah 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 blah. And so that also deals with the rest of the theme for the video about the ranges of trading because it's not about just trading a range. It's about ranges of other things. So emotions. You're going to have a range of emotions. It's natural, it's human to do so. It would be wrong for you. It would be wrong. It would sorry, I said that wrong. It would be wrong for me to say you should never have emotions in your life. That is not appropriate for me to say and for you to take seriously. Now, now when because when I say something, you should not have you should have very little emotions in trading. That is not saying you shouldn't have any emotions at all. It's okay to have emotions. It's what I do mean to say is that it's not necessarily beneficial for you to let your emotions affect your trading. So there's a big difference there. Obviously, I'm a husband, I'm a father. I know what it's like to see my newborn child. I know what it's like to be there on my wedding day, and those are good days. Those are good emotional days, and you have every right to have every sort of emotion, every positive emotion that you have. Laughter, tears, those are all something that is beneficial to experience. Those are not wrong. Those are manly emotions. We really need, I'm talking to the men in particular, but we really need to cut the crap that we need to, like, being a man is about being always just only being strong or only being like fierce or only having like a look of seriousness. Like being a man also has to do with compassion and laughter and honestly tears at times. We all were made to have tear ducts, and so that's a different discussion, obviously. But what I want to mention is with emotions, it's perfectly okay to have emotions. It's perfectly not okay to let your emotions directly affect your trading. And that's why I bring up things like the Middle East, because you get like a tempo for the past 2 to 5 years. I really and again, I'm not saying anything directly about the Middle East. When COVID happened, it was like the perfect catalyst, and people are still affected by this. It was the perfect catalyst to lose your ground on your emotional weight, um, on your emotional stability, things like that. And again, I'm not saying emotions are wrong. It's perfectly okay to have certain emotions and things like that. But what it did serve is it did help give us an instability of how we treat the markets, how we treat trading. And so, and I say that to say, whatever you do in your personal life is not my business. But when it comes to trading, I can tell you, I've been here since 2017. When COVID happened, there was a massive flip of the switch where we need to focus on the S&P 500. We need to focus on what Jerome Powell says. We need to focus on the DXY. We need to focus on the NASDAQ. We need to focus on bonds, on treasuries, on housing markets, on commodities, on wood, on wheat and oil and everything. And so my concern is it's not so much about those things, it's about why you're focused on those things. And one of the reasons you're focused on those things is because most people saw the COVID as a catalyst to all of a sudden start caring about things they never cared about before. And I think some of that's reasonable. I mean, I'm not here to dismiss that, but it has overall negatively affected people's trading. Okay. And one of the prime examples was really the COVID pandemic itself when the stock market closed. Like everybody was fearful to trade. And that was the bottom. That was the best chance to buy Bitcoin. I remember very famous influencers that were saying right here at this candle we're going to be going lower, and that this is going to be a bearish retest right here at 67, at basically 7,000, and that we're going to go back down. We never did. That was the low. So when I say these things, I don't want people to take offense. I've taken a firm stance that I don't prescribe to the S&P 500 when I'm talking about crypto. I don't prescribe to Jerome Powell when I'm talking about crypto. Those things, you can talk about those things. Yes, they can make sense. Yes, you can create a story. Even, yes, they're sometimes correlated. But overall, when you look at all the probabilities and statistics of that, it's going to cause you more harm than good. And so again, you could be concerned about COVID. You can be concerned about the Middle East. When it comes to trading, we still need to keep our heads in the game. Okay. And I say that with a heavy heart. I really do. And I do understand I say that with some um really a lot of my own security currently. Like I'm not in a dangerous spot right now in where I live at. And so I understand it. So I have a lot of sympathy for that. But I'm saying this from trader to trader that you need to be careful about any of these things. And so we can get into that, but COVID was a good example of, everybody was super bearish, and then we launched, and then people were hesitant, like, oh, we're gonna do a bearish retest here. We didn't retest. So, all right, we're gonna come back, we're gonna break down, deviate. That didn't happen. And we went all the way up, and people were even in a bullish state here because that the bull market hadn't happened yet. And so even then, when people thought we were going to go down, and then people still think that we're going to retest the COVID lows, and I mean we're still almost 500% above that. And so I mean, I'm not saying that they're wrong, but I'm saying like good luck, I guess. Like I don't understand why. I mean, I understand why, but as a trader, you should not let one thing that happened one time, and I say this very lightly because my father-in-law died during the pandemic because of the pandemic. So I say that with a heavy heart. But you should not let one financial aspect of the market determine what should occur 3 years later. almost 4 years later. See what I'm saying? So again, I'm talking trader to trader. I'm not talking directly about these COVID issues or Middle East issues because they are big concerns. I had a client, I had a Russian client that I worked for, that I worked with for over 6 months. And one of the reasons that I had to break contract was because of the Russia Ukraine conflict, war, whatever you want to call it. So I know more about this situation than probably the average person in America. But again, I don't say that to flaunt it. This is not about that. Like this is not a pissing match. Okay, I'm just talking trader to trader. And so when I talk about the manifold ranges of trading, I want to talk about the emotions as well. So don't, like, and I say this because yes, what's going on in the Middle East is bigger than I'll ever realize. And if you don't know anything about it, I think it's wise to have kind of a prudent approach to that, a very cautious approach. Read up on the history, things like that. But as far as being a trader to trader, this is the perfect catalyst to be more emotional in your trading. And so I'm not even saying that that's wrong to do so. But when you start to get more extreme aspects of being emotional, when you start trying to justify those things in trading, those are usually the times when the market will do the opposite of what you're expecting. Okay, so for example, if you believe that the market will go down because of the conflict over there, well, the market might just go up instead. And I did have some correlative data about the pandemic, about the Russia Ukraine, about the Afghanistan and things like that, but I decided to omit that for this video. A little too more complex. So I want to kind of do a little more of a general idea of emotions. And so the and again, I say this with a heavy heart, but the times that people will ask you to be emotional and you will feel that this is the one time that you need to be emotional trading, it's almost always the wrong thing when it comes to trading. Okay, and again, I go back to the pandemic. Everybody was scared, and rightly so. People were freaking out, and rightly so. I didn't know what was going to happen. I didn't trade this properly. Okay, I did lose some money, and I didn't lose a lot, but I did lose some. Mainly just because of the market fluctuation, not because any of the fallouts for any of the exchanges. But it was the perfect time to buy. Okay, I'm not, and again, so I'm not saying that you should buy now either. I'm not saying that you should sell now. You do what you need to do. But what I am saying is, when things look like to the extreme on the emotional side, typically that's where the market will react the most, and that's where you can take advantage of the market the most. Okay, I'm not saying that you should take advantage of a conflict. I'm not saying anything like that. But what I am saying is keep your head in the game. Keep your head in this market. Okay, think rationally, think on your feet. You know, now is not the time to lose money. I've said this before. Now is the time to accumulate, in my opinion, and I think we're still on that track. So, anyway, that's kind of the segment portion of that. I could go on and on, but I realize I need to kind of be cautious of the time. So, I'm going to go ahead and continue on with the analysis part of this. I'm going to start on Bitcoin, going into that, and so general summary of the segment is basically just keep your head in this. Like don't let your emotions affect your trading. Um, and so it's yeah it's a scary world out there. It's a harsh world out there. And again, I wish I could share more about that. Honestly, I really do, but it's not it's not my part. It's not my say directly. So, but as far as trading it goes, the whole idea is I want you to be the best trader that you can be. And part of that is to understand the weight of the market. So, all right, on to the next. All right, so going on to Bitcoin, I'm going to talk about the weekly time frame and this particular portion in regards to the manifold ranges of trading, I'm going to talk about price action ranges. So this is going to be much more technical than the rest of the video where I'll get into emotions and everything else. But this is going to be directly about price action while I discuss the weekly and downwards. All right, so I'm going to get rid of this. We're going to look at the weekly. So we had a pretty strong one a couple weeks ago. Overall, this is kind of, a lot of people interpret this differently, like evening star, things like that. I don't really flow like that. That's not really what I analyze typically. But we had pretty much like a Darth Maul week, nothing significant on either side. Typically, it's a result of market supply and demand, just not really knowing where to go. And so that's kind of why I don't really treat it as anything else but that, because we have these here that leads to continuation, but we also have other ones that don't lead to continuation. Like this one here was basically the same as this, but that was led to a top, as far as the close is concerned, things like that. So there's a lot of, it's more complicated than that, but I don't have enough time to talk about the probabilities to realize it doesn't. You will find this more often than almost anything else is that no matter what it is, whether it's a swing failure pattern, whether it's an Adam and Eve pattern, whether it's a trend pattern, RSI, whatever it is, you will find when you back test an idea that you have, no matter what it is very common to see that that thing that you thought was profitable isn't actually as profitable as you thought. Only in rare cases is it more profitable than what you thought. And so that's what you need to realize, and that's what I teach in the Apex Academy, by the way, is a ratio of what is profitable versus what occurs. There are very, 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 very profitable methods to trading, but they don't happen very often, or they take years to get you to build that up, and some of you guys can't wait for 3 years, and I understand that. And there's other things that happen all the time but are not profitable, and I teach what is the most profitable in terms of ratios and things like that. So that's for another topic. But so far for this week, we've had a bearish week. That's pretty typical on a Monday, Tuesday opening that we have a bearish beginning of the week, and then we tend to change that as we go. RSI is still above the 50, so that is one reason why I'm not bearish right here, because I have no reason to be bearish. The 50 RSI is a switch point between the market. It is not the end of a trend, it's kind of the beginning, so to speak. And so I've got some room for this to go down. Excuse me. And so my thesis for a bull market is fine. In addition to that, I've got the bullish A-ring consolidation to help me along with that. So everything is looking okay. It's not necessarily looking bullish, but it's not exactly the doom and gloom, is what everybody's saying. And that's kind of what I'm talking about with the ranges. Like, I don't want people to be overly emotional to the point where it affects your trading and you miss out on something. And so that's pretty much the weekly. There's a few different ways that we can look at this. We did have that liquidity zone here. I'm going to map that out right here. That's pretty much about what we got roughly. So we're still under that zone. As long as we're under that zone, from a major standpoint, yes, we do need to flip that. But by the time that we flip it, it's going to be 32,000. And that's going to be a little late for some of you guys. And that's also why I think it's good to keep your head in the game when talking about ranges, because a lot of you, a lot of people, and again, I bought I bought in the 16s. And so a lot of people were doing the same with the COVID pandemic. They saw this break above. Oh, it's going to retest. Well, it did kind of, and they're like, well, that wasn't good enough. Okay, it expanded. Now it has to come down. This is the biggest bull trap ever, right? Then it came down. They're like, oh yay, it's finally coming down, and it went back up. And so and now we have the same thing. And yes, now we have a lower high, but we also had one here. No, I guess that wasn't really it, but I mean, we did have one here, but that is a different point of the market as well. So again, I'm not saying these people are wrong necessarily, but it's one of these things like when will you give up that thesis? I don't understand why you want to hold on to one strict thesis for an entire year that hasn't even happened, and you have no probability, like you have no assurance if that's going to happen or not, and even if it does happen, you might not even take advantage of it. All right, so now I want to switch to the daily. Kind of look at this as well. So again, we had sort of a, I'm not sure what that is. So we had a little bit of a drop down. Let me see. I think I might need it actually. So let me change that away from the daily. All right, looks good. So had a little bit of a downtrend here for the first, for the last 3 days or so. That's kind of where we are currently. We kind of deviated below the range, and then we also have, I mentioned this in Discord, that we had kind of a C fork, and so that looked like this, but obviously that was broken. So now we're kind of in this zone here, and so I do think that we're going to hit the trend line. I mean, that's pretty simple for me. I see this kind of gap here. This is where, I would normally have it above the top, but now we have this breaker. So I think that we're going to hit probably in the middle, about 27,100 roughly, or 150. And I think that's going to be pretty much about right. Now, whether that's going to happen today or tomorrow, I don't really know for sure. We are above the RSI on that one. We do have a bearish wedge in play, so we should see an acceleration of bearish trend. And so I am in agreement. Most people are saying that we are going to get more of a short-term sell-off, and I do agree with that. But we do have this level to contend with, and the low of that is going to be basically 27 even. So as long as we hold 27 even, I think that I'm still pretty bullish overall. I don't see any reason to I don't really see any reason to be concerned about this. This is where you need to be preemptive instead of waiting for reactions or things like that. So this is from a price action perspective. So what does it have to do with the price action with ranges and the manifold ranges of trading? Well, we need to understand there is certain degrees of ranges within our price action. We can't just say every bearish candle, like it's really dumb, honestly, to say every bearish candle we're going to go to 10,000 or even 15,000 or even 20,000, honestly. And quite honestly, even 25,000. If you're really honest with yourselves, just look at the previous history of every candle. And all the time I see basically something of the sort, well, this week is a big week, or the next candle is going to be the one that takes us to 20,000 or 15,000. And some of you guys know I exaggerate some the way that I say that sometimes, and then you'll counter, like I've had some people counter me like, well, nobody's thinking 15,000, but I think 19,000 is okay. Like, okay, it's fine if you do. I don't really care. I don't agree with that. But again, like you're trying to make yourself sound smarter by having something less extreme, and there is some wisdom in that and some understanding, intelligence in that. But also, you, it's very unlikely that you're just going to get that in just one candle. Okay, and the fact that some people wake up every day and think that this is going to be a nuke candle 20%, or it's going to be a pump candle 20%, like you should know that obviously rarely happens. Okay, just look at the previous charts. How many times did we think that this was going to nuke? And I mean, eventually did a slight nuke. I mean, not a whole lot, but how many days did you have to wait? You waited almost 3 months to finally get what you wanted, and then you had a 7% candle, which really isn't that big of a deal in the retrospect, because from top to bottom that was like 15%, so that's like only half. Yeah, I mean, yeah, that was half of the move, but the other half took 3 months to play out. So see what I'm saying? And in the grand scheme of things, yes, 15% is decent, but a lot of you guys are craving more than 15%, and you gotta just realize how very little often that happens. Okay, and so even then, you got trends to worry about, you got sub trends to worry about, you got all these other things, right? Not necessarily worry about, but you know what I mean. So I want you guys to keep that in mind. So when it comes to the ranges of trading, this is the primary range you need to be concerned about. Things happen typically in ranges. When things accelerate, they have moved from one range to another. And so you got that to work with. So I just want to keep that in mind roughly. But anyway, that's the daily, weekly perspective. Overall, I think I'm neutral right now. I'm still bullish, but that might have to be postponed for another week, it seems, or even 2 weeks. But I think right here, the 27,000 area is a place that we need to defend if we want that to occur. If we don't, then we're looking at 26.2 for the first target. and then probably right in the middle of this area right here, about 25.4. So, but I think that will be something that we look at if we break this 27,000. So on to Ethereum. All right, on to Ethereum. We're going to go to the weekly first. Um, Going on into this, we had this down. We had a really, honestly, a really good week 2 weeks ago, and that's pretty much all been faded, which is not a good sign. When you get a big pump like this, you should not really fade into this. And what I've mentioned with Nowhere in my Discord channel, this is something that we do need to be concerned about. And my focus has now switched to Ethereum because if this breaks, the whole market is pretty much not going anywhere for probably another month or two. Unfortunately, this might be the first quarter four that we don't really get anything worthwhile. Now, there is some things to be hopeful about or have some hopium if you are bullish because we still have 5 days to go. This could retrace. If this comes back inside the range, then I would be more inclined to believe that this could be longed instead of short. So this will be a significant week. I know I just said in the Bitcoin segment to not say those kind of things, but this will be a critical week as far as the macro level on this is concerned. If we break this, we could be going down more into more downside. And honestly, there's not really, other than this, there's not really much that's in the way until about 12,000 or not 12,000, $1,280 roughly. So just under 1,300. So we have that to be concerned about, but there is a lot of time. So from the weekly perspective, this looks very scary. So far, we have no reason for this to be scary because if it closes right now, that's still bad news, right? So there's no reason to be concerned or scared or fearful as long as we have this weekly candle open. And so, generally, in my experience, it's perfectly okay to wait until the candle close. Okay, and I think that's a lot of people. I should have said this in the price actions segment of this, but a lot of people want to see this, and all of a sudden, like they super short, or they sell everything, and then it could wick above. I almost never, and this has led to some cons, but I almost never deal with price action until the current candle becomes a closed candle because you never know. I've seen it so many times where things wick or things accelerate or things do the exact opposite of what you want to do because that candle has not finished. Okay, once the candle has finished, then I can make a determination. Yes, that does disqualify me from certain aspects of trading, but it also helps me qualify for other ones. And so that's you got to understand you need to understand that you're not going to be an expert at everything in the market, so you need to understand what you can understand and then continue with that. So that's pretty much the weekly. um, Honestly, the damage has already been done on breaking that, so this is more of just a waiting game for the next 5 days, and we'll see how that goes. Honestly, the markets don't look that bad to me today. A lot of people are concerned about the chop and blah blah blah. Market's not doing anything today. Okay, and I think that's overall a pretty decent sign that we could get this retrace. And so, if this closes under, then I'm definitely bearish on a higher time frame perspective for Ethereum, and that could negate any sort of altcoin season I might think that we have. So it's not something I want to say, but something that I see on the market and needs to be addressed. I'm going on to the daily. We can see the zones kind of mapped out a little bit. I kind of kept these to keep it easier. I've got the ranges marked out. We did not break below on this candle, but we are breaking below right now. We still have 7 hours to go, so there's some consideration. We did break bearish on the A1 cross, but now we have a consolidation pattern that we could form. And so what that means is, so we had a low, but then we retrace pretty heavily. And so when that happens, you get the cross like that. Now this becomes its own range, honestly. Basically the whole wicked area of these last two candles. So that will determine basically what could happen for the rest of the week. And so whatever break this does, it's going to cause a strength of that break for the next week. So if we break down below 1550, chances are we're just going to break this entire bottom here and go down to new lows. If we break above the 1600 area, chances are we're going to probably reclaim the red territory and probably even the blue. And so that's why that occurs. That's why consolidations on A run are so strong. And this one's pretty wide as well. So you have that to consider. So overall, that's another reason why I think that we need to wait for the weekend for the week candle to close, because this will probably have played out by then. And so then we can determine where to go with that. So a little complicated with that, but that's the daily perspective with Ethereum. So that also ties into the ranges of emotion as well. I mentioned that, and that was going to be the segment for the Ethereum part of this, is that there are trading ranges, but there's also ranges to emotion. Right now, in this particular area for Ethereum, now is the time when people start getting more emotional as things start hitting the marker on a higher time frame perspective. What happens here for the next 5 to 7 days is will affect the next month for this. So chances are they will. And so that's something you got to play into it. And that's one reason I do connect having emotions directly related to trading versus emotions in real life, how we think about. And it's honestly, I take the standpoint is where I want to be as emotionless as possible when I'm trading. And a lot of people will think that I'm callous about that or unconcerned or even stupid. And I try to address those claims, but I would counter that with an idea that maybe, like, how superfluous or um, how morbid is it to assume that everything outside the trading world is going to affect the trading world as well? Like, you can flip that script and look at the same thing. Like, what? Like, I do think if I do think you can look too much into what you see on the news, and some things I think are valid reasons to be concerned in relation to trading. But you know, I don't necessarily see it as healthy to look at the outside world and see, all right, how is that going to affect my trading? How is this going to affect my trading? How is the in the U.S. It's like, how's the economy going to affect it? How's the immigration? How's the election? How's the stock market? How's this? How's that? And or if it's the Middle Eastern stuff, or if it's the Ukraine Russia stuff, or it's the China stuff. There's always something that's going on, and yes, some things going on more effective than others. There's layers upon layers. There's things that you can hold fast and true to. There's some things that are multi-layered and complex. There's some things that people want you to believe over others, and it's very complex. And I think it's very naive for someone to think that other people don't know that. Like, you are not the expert. I'm not an expert in that. And so it's very possible for companies and news sites and other things to try to affect your trading on purpose, and try to feed you what you think you'll react to. And so there's multiple layers of that, right? And so again, I'm not saying anything that any of that's wrong or right necessarily. I think that's a different topic. It's not something I'm well versed enough to discuss. But what I want to mention from an emotional standpoint is that that's why you need to double down on checking your emotions instead of just letting them free for once or whatever. So it's, again, I go back to the segment part. It's okay to have emotions. I think you do need to be careful on how that affects your trading. And that goes with fear as well. I think it's a good time to be fearful, honestly, if you are closer to a certain area than others. So that's another thing. And then there's also social media. Like, I was talking to my wife about this with Twitter this past week. She doesn't get on Twitter. She does follow me, but she doesn't get on it very much. And she checked it the other day. She's like, wow, Twitter or X has really gotten a little more PvP lately, so to speak, more rigid, and a lot of people are fighting, and there's more graphic content on there. And I'm like, yeah, that's how it's been for a while now. And I think being on Twitter or X is much different than being on Facebook or Instagram or TikTok or LinkedIn. Like, you're going to get a different view of what the world sees in the lens of that social media platform. And so that's another thing. You're going to see a different angle of that, and that might affect your emotions. That might do certain things. And again, I'm not saying anything about that per se. I just don't want that to affect your trading in a bad way. So That's kind of that in relation to Ethereum. Right here is a very critical point. And so now is the time in this price action to keep your head in the game and not let your emotions dictate with the break of this trend. Let the week play out, let the weekly candle play out, and see where it goes from there. All right, on to Solana. I don't think I'll do extra altcoins because I'm going to do an altcoin request video later today. So I'll finish everything up with Solana here. All right, going on to Solana, we had a little bit of a downtrend since I took a small break behind the scenes. But one thing I want to mention for the weekly is that we have a breakdown thus far, pretty significant breakdown in response to other coins, perhaps. But we're still within this continuation pattern. We're still holding this level. This is kind of a daily level, however. So that isn't in regards to this one. But overall, we are failing the RSI currently. We do have a bullish consolidation that isn't really doing much just yet. So there's a lot of uncertainty with this. There is a bit of a breaking down on this, but again, kind of lends the perspective that we have on Ethereum. We might have to wait for the weekly to determine this. I know it's going to be frustrating because you have all these things at play, but that's only more reason why to not rely on your emotions and rely on what price action is telling you. Going on to the daily, this is an idea that I had on Discord, or it seems like it's not playing out so far, but we have a breakdown of this thus far. We still have 6.5 hours to go. This is a lower time frame price point that I was looking at where it could go down to about 27.3. I'm gonna kind of get rid of that for now. But this is the level we want to hold because you almost have a double top here, breakdown, and you kind of want to retest that. So you do want to hold that. If we don't, we're probably going back down to 2035. Another thing we can see, this is holding on the daily, so we do have a little bit of hopium perhaps, but also we have a bearish consolidation. So we have a lot of that. We have a breakdown of the RSI on a weekly with a bullish consolidation and a holding of this with a bearish consolidation. So it's very tricky. We're going to get more chop than you might expect. A lot of different things are going to be at play with that. So overall, in connection to this, as far as the theme of the manifold ranges of trading, also want to look about the possibility. I think Solana looks very, very, very good on higher time frames, especially like beyond the weekly from like as of current price. But overall, like this structure looks good. There's a lot of stuff that's being built and being done on Solana. I just got an invite to like a game on Solana, which I don't normally like, but the guy was very honest with the way that it was presented, so I'm gonna give it a chance. But it looks like there's a lot of development going on with Solana, and so with weekly, I think it looks pretty good. Maybe like a year or so from now, but I also understand that that comes with certain stipulations. So I'm gonna throw myself under the bus for the last portion of this and talk about the ranges of possibility. Okay, there's a lot of people out there with Bitcoin and crypto in general thinking that we're going to go to all-time highs. We're not guaranteed 300,000 Bitcoin. We're not guaranteed 100. We're not even guaranteeing all-time highs for any coin, including Solana, including Bitcoin, Ethereum, everything. Okay, this market could be dead. It could be the bottom of the bottom. You don't know, and that's the whole idea. Like it looks easy in hindsight. Looks like you got lucky in hindsight. When honestly, it does take patience and persistence and things like that. But when it comes to this, there is a range of possibility as well. You need to understand that although I say that this market looks good, I think Solana is a great buy right now around the $20 range. I also know that there is a possibility we may not get to all-time highs, much less new highs, or much less even 100. And so I'm aware of that. But I also think that that needs to be placed in perspective as well. There are possibilities, and there is a limit to the range of bullishness, and that's a possibility too. I think people can be too bullish unnecessarily. I think people can be too bearish unnecessarily. And that's not really having nothing to do with emotions. That's just more price predictions. So just overall, keep in mind that the possibilities are just that, possibilities. They're not necessarily reality until they become reality. And so you can take advantage of those possibilities by seeing what you could get, what you can take advantage of, but also don't be blindsided by them and then you lose the opportunity to take advantage of something in the near future, perhaps. So, or to maybe to place your money elsewhere. So, anyway, that's the video. I hope you enjoyed it. I hope you liked it. It's a little bit different theme, so I apologize. If you didn't like it, I might go on to a regular theme in the next week. So, overall, that's the market. Hope you enjoy it. Hope you do well. Hope you make money. See you next time.